disclaimer, didn't you? Good. Queensland audience, so you probably recognise Mincom, which was a tremendous success story in Queensland. Today, something quite different. Decimal is in the fintech sector, and I'm very excited to tell you about the story today. No doubt you've all been reading a lot about fintech in the papers. I hope you have anyway. And then within the fintech sector, Decimal specifically plays in the robo-advice, or what has commonly become known as the robo-advice sector. We would have started off calling it the automated advice sector, so the automation of financial advice. The media and analysts leapt on this term robo-advice. That's fine. We're happy to run with that because it's certainly getting a hell of a lot of attention at the moment. And so the hottest space within fintech is robo. I'm sorry to tell you that no, there is not a robot at the end of this that does the advice for you. And unlike some of the press releases, I'm not the robot in the picture. I hope, anyway. So yes, it is a burgeoning space, and in fact, I suspect that given that you're active investors, a lot of you are reading every day about a new robo technology that's hitting the market. Certainly in the US and not least in Australia more and more. So one of the things I'd like to do today is just explain some of the differences about what we do versus what you're reading about, as well as what and how we fit into that picture. Because it is, we're at the beginning of a really long journey here of this technology. This will become a standard offering of all major financial institutions, just like internet banking is. So if you cast your mind back 15, 20 years ago, you didn't have an internet banking option. Now you wouldn't be without it. So automated financial advice will become a standard pillar of any financial institution's offering. It's a given. It's a massive global market, and we're taking a big part of it. So to that extent, this is our sort of mission statement, if you like. It's the democratisation of financial advice. Most of you probably are aware or are not aware that 80% of Australians don't engage with any financial advice at all. That's quite a large number. In the US, that number is 70%. So our mantra is, how do we deliver qualitative financial advice to that audience? Now, we are not in the business of going and trying to get your business personally. Our business is around providing technology platforms to the major financial institutions that you already bank with and have a trusted relationship with in order to deliver that, in order that you can have choice about the way you engage either with a financial advisor or not with a financial advisor, through an automated advice platform such as Decimals, and possibly a hybrid where you're doing both. And that is quite the thing. We're not about getting rid of financial advisors, contrary to some of the media hype. It's about choice. No bank says to you that you have to go and you can only use internet banking, you can't use the branch, or you can only use the branch, you can't use. It's a choice thing, and you determine that, and that's where this will end up as well. I'm guessing that a lot of the audience is self-managed here, but let's just do a little show of hands. Who uses a financial advisor today? Okay, so that's actually probably a bit representative of what I'm talking about. I'm surprised by that. Don't point people out. Self-managed funds here today? Yeah. So therein lies one of the massive challenges for our customer base is the banks and superannuation funds, is that the growth in self-managed funds is huge. So people are leaving those things in droves to do exactly what you're doing. So how do those banks and institutions engage with their audience on a more cost basis, on a better cost basis? Quick company overview. We think, and we have this validated every day by analysts in the US as well as customers, as well as people looking at this all the time, we've delivered the first modular platform that can deliver an automated statement of advice, so going through a triage approach with the client online, 100%, two-statement of advice, and the real catcher is at the end of receiving that statement of advice, they can hit the button and they can execute that advice. That's a world first. And it's a Queensland first too, by the way, another Queensland thing. Q-Super delivered that. And Q-Super aren't known for being a big marketing organisation, but they are at the head of this curve globally, not just in Australia. So if there's any Q-Super members out there, you should be enormously proud of what they've done. In fact, as an interesting aside, when I first started at Decimal, I got an email from a Q-Super member saying, can you tell me when the next capital raise is, because I want to invest in the company, because I'm a Q Super member, as is my wife, and we've both enjoyed the online experience so much we want to buy shares in the company. So there you go. Queensland, go. So the global market for this, as you can imagine, is massive. In Australia alone, we have 2 trillion funds under management. It's Chinese or phone book numbers, so I'm not going to try. You can read those. We have been doing this for some time. The founder came out of Asgard, which is one of the main platforms for financial advice in Australia. He saw the writing on the wall about 10 years ago and started sort of planning in and around this. So over the last 5 years in particular, we've invested heavily in a platform which is industrial strength, a platform that will cater for the world's largest financial institutions and scale to literally millions and millions of customers. We are not your typical fintech startup guys with skivvies and beards and things like that. We're kind of industrial strength guys that have come out of that environment where we need to build things to scale, and they need to be able to integrate with all the complexity of the financial world, and particularly with big banks, the multiple systems that they have, in order to deliver this very personalised service. As I said, we have the foundation customer, the cornerstone customer was Q Super. At the end of last year, we signed an agreement with Mercer, which is an extension of our original agreement. I'm sure you all know Mercer. What you probably don't know is that Mercer is a super fund administrator for 170 Australian super funds, from Wesfarmers down. So they have I think a total constituencies of 1.4 million end users. So they are as much a channel partner for us as a customer. So they'll be offering this automated service through Mercer to all of those 170 super funds starting this month, basically. After a bit of a reset last year, and my appointment at the end of last year, we clearly had a reset. What happened in that 6 months, though, was that the market really woke up to this area. So what the guys saw in building this over the years came to fruition sometime last year. And again, if you look it up, do a Google search on it, you'll see a multitude of media. So we sort of did a build it and they will come approach, which is now starting to pay off. So I've been through a lot of these technology businesses where you've got a market like robo-advised, which is going crazy through the roof. What most companies are doing is they're chasing that. They're coming out with PowerPoints and this and that and the other and saying, we're going to do this and we're going to build, and it's kind of too late. We're at that really important intersection now where we built ahead of the market's now ready, and we're ready to go. So for us now, it's all about execution, and we're gearing up to do that. So April's a big month for us. We're launching 2 new offerings to the market, a pre-configured offering and a tier 1, knock yourself out, years and years of development of building your online experience for your customers. Just quickly, just flavouring, what the advice market looks like. Most of what you read about is probably what's called their robo-1, and that is startup businesses with a bit of technology that are a business-to-consumer model. So they're after your business. They want you to come on, open an account with them, and they've got some technology that might guide you through some risk analysis or things like that in order to sell you a product, largely an ETF. Nothing wrong with that at all. That's fantastic. It adds variety to the market and all that sort of stuff. So that's where most of the media is focused at the moment. The other one is the sort of one in the middle, the advisor robo. So that's where you take your existing, what we call carbon-based advisors, so technology in and around making advisors more efficient, the sort of stuff that you'd expect them to be managing your investments on their platform, so to speak. And what they're trying to do is retrofit an online experience to what is really a desktop experience. And if you're a technology person, you'll understand that that's a challenge. Nothing wrong with that, an entirely valid way to go. And how do we make those guys more efficient? And then, of course, on the left-hand side there, you have the traditional advisor model. Again, nothing wrong with that. Where we sit is, again, providing that standard platform, the white label, into the large institutions. So to use a very West Australian vernacular, we're selling shovels to miners. We're not trying to be the miner like the Robo-1, where they spend a hell of a lot, not much money on technology, but a hell of a lot of money on customer acquisition. And clearly the benefits for people that are adopting Robo-Advisor 2 is the ability to address that 80% of the market in it's an opportunity to address them in a very cost-efficient manner. Think of things like every statement of advice that's issued costs one of those banks about $1,000 to $1,200 to provide. If you're doing it via technology, your incremental cost is zero. Think of compliance, which is pretty topical at the moment. Compliance costs about 30% of most of these institutions in terms of what they're running. If you're using a platform like Decimal, your compliance cost is no different if you've got 100 customers than if you've got 5 million customers. It's all systemised. And of course, the other beauty of that is that it is in the system. Nothing goes outside of the system. Everything is trackable, auditable, transparent, and there's a full compliance login configuration sort of module for the compliance people within the bank who we work very, very closely with in delivering these solutions. So the scale of that is enormous. So that's where we sit on that in a fairly unique thing. And as I said, we validate this regularly. I have no doubt that in a year, 2 years, 3 years' time, you will see other decimals out there from the US, from the other markets, doing the same thing. It just, nobody builds their own financial system anymore. They buy it off the shelf. So this is where this is going to go. And we know that because we've been around. I just want to give you a quick flavour of what it looks like. You know, a lot of people sort of get it conceptually, but sort of here's just this, and this is very intentionally bland. So please don't, because the front end is white label. So every financial journey for every different bank and institution and customer segment will be entirely different. And we're really at the beginning of that now. But here's what we call advice topics. So there's five advice topics there, very, very typical ones. And that tends to go down, in this instance, you hit one of those and it takes you down a pretty standard journey of asking you a bunch of questions, you know, how old do you want to be when you want to retire? How much do you want to have in your balance? You know, how long can you live? All those sorts of things. And then it'll come out with a statement of advice depending on what sort of things you're interested in. Again, it's all captured, it's all there. That will then take you to the SOA. You can print that off if you want. You can keep it as a PDF or whatever. But then importantly, you can execute on that as well. Now, because that's from your superannuation fund or your bank that you already have a trusted relationship with, you're far more inclined to actually execute that advice. You can actually go away and think about it as well. If your situation or your circumstances are more complex, then the system will also tell you that. The system will say, actually, you should probably go and speak to an advisor because of these reasons. So we suggest you go to, would you like us to put you in touch with one? Or would you like to just do, you know, a phone session for a few minutes to get you through that? So that's a fairly typical one. The other one is when you start to get to a point where, because we're taking data out of our customer systems who you have a relationship with and they have information on you, and people's expectations in this day and age are getting higher and higher and higher about what they expect from their providers. So it is the case of, you know me, sell to me. So, you know what, I told you I want to retire at 77. I told you I want to retire with $500,000. Why are you asking me all this again? You already know that. So this is an example of a situation where, to a broader market, you can be very, very much personalising that engagement. So, you know, Jason at the back there, you told us that you wanted to retire, you know, at 55 with $500,000 in the bank, and live comfortably, blah blah blah. By the way, we've looked at that and we can tell you you're not going to make it. I'm sorry, but for the cost of 2 lattes a week, we can probably get you to $600,000 a week. Sorry, $600,000 in your balance when you retire. Would you like to do that? Yes, please. Click. Okay, done. All right, so you're on your way. So it's that real-time, that personalisation and real-time capability. As I said, just be aware that there's all sorts of incredible and exciting ways that we can deliver this message. Now, of course, that's obviously not a message to a millennial or a young person. The conversation online that you can have someone with a 20-year-old is going to be entirely different to the one you're going to have with a 60-year-old. By the way, I think our oldest user is 86. So I don't buy this argument that old people don't use technology either. I think that's nonsense. It's about choice. How do you want to engage? And the other thing is, don't forget that if you're a younger person using automated advice today, may well be the customer of a physical or carbon-based advisor in 20 years' time when they have far more assets under management or complexity. It's just choice. Yeah. How do we make money? So we are a technology company. We are you probably all know and love this term SaaS, so that means software as a service. So we're centrally hosted. We have one instance on AWS, Amazon, which is obviously the big behemoth of cloud-based services. from a compliance point of view, that improves the story enormously. We're not managing multiple instances of advice in multiple customers with multiple versions of software. That would create risk. We are managing one multi-tenanted system, which multi-tenanted means we could have any number of banks and institutions sitting on there with their own private section. However, when we run testing and those sorts of things, for those of you that have kept up with the ASIC reports in the last 2 weeks, they're starting to write some guidelines in about robo-advice and what they expect and what have you. So when we're testing those algorithms, we're running it through once. So the risk profile is dramatically reduced. We can even offer to our clients, through the compliance console, it could actually be a regulator's console as well. So from a trust perspective or as a customer, if I know that ASIC can log onto that system at any point in time without asking and just make sure that everything's tickety-boo in terms of audit and what have you, that gives me quite a lot of reassurance. So we make our money through rentals, and then like any blue sky technology company, there's the uncapped part of that. So we have a baseline rental for the institution, and then they buy blocks of users. So they buy them 10,000 blocks of users and or advice topics. And I showed you some advice topics before they come. And I said there's a superset of about 100 advice topics. So the model scales, so that, just to put that in context, a large bank, tier one bank, would be paying sort of a few $1 million a year once they start to roll this out in earnest in terms of lots of products, lots of customers. They've got, literally millions of customers. We have just released this offering called Equalise, which enables people to get up and going in this for a small, medium-sized super fund within 3 months for $250K. So, and in fact, you'll see an announcement about that soon. So it's that whole recurring model, but also uncapped. I have to skip along a bit now. The network effect, that's the Google factor, all those sort of things. So as more and more people come onto our system, and we are seeing tremendous results from the 2 key customers at the moment already. We already have over $3 billion Australian dollars in funds under advice going through the system. These are a few weeks out of date now. It's literally growing by the day, as you'd expect. But thousands of users, and 60% of those people are going through the statement of advice and then on to execution of advice. It starts so clearly we can then become an information base about what the customer looks like. Who is using this? And I call it uncommon sense. Everybody talks about this sort of thing as only for the millennials. Well, look at the average age there. It's 48 years of age. My age. I mean, why is that? Because you get to that age and you start to think about your retirement, don't you? It's pretty obvious. Just because I'm 20 doesn't mean I'm going to look at this because I've got a mobile phone necessarily. But guess what? I know how to use a computer. So we've talked about Q Super as a really core beginning for us and a really important and valuable client. The Mercer thing, the key there is the leverage that we're going to realise now through those 170 super funds and 1.4 million constituents. And then in terms of where we're at this year and the launch, we will be launching those offerings based on the platform that's already built. It's not new product, it's the same product but packaged. We have that distribution through the super fund administrator. We are working with some of the world's biggest software brands that haven't actually gotten onto this yet in terms of they've been a bit caught out. So the same people that are providing core systems to the major institutions globally, we are in conversation with, and you will recognise all of those brands. They can OEM this product into their offering and white label it again. And same on the right-hand side, they're the global consulting brands. So all of the big four, if you want, the fat four or whatever, the people that are advising these banks in and around, you need to go digital, you need to start distributing, you need to look at your compliance and go digital and all that sort of stuff. Those organisations are incredibly interested in us, and we're on the cusp of some pretty significant announcements in and around both of those areas. So, as I said, we are due. Experienced team, grown-ups, been around the industry for a long time, just to give you a bit more comfort. So we're not just playing with phone apps and trying to deliver on an aspiration. So just in conclusion, why? And as I said, I've been down this journey a couple of times now, and where we are today is at a classical inflection point in a technology company. The platform is built. We've won the first cornerstone customers. We've at the same time as that, the market has started to wake up to what we're offering. And then really importantly, just now and last year, those first customers started delivering out of the park results. And so all of those things, and now we're at a point where we know what the market looks like. So we built it and they will come. Now we recognise the types of customers we're talking to, so we can package it up to make it easy to buy. So we're really at a really key inflection point to launch and to bring on new customers, partners and what have you. So you'll be seeing a lot more from us. And I think that takes me to zero.
Thank you, Nick.
Thank you.